Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 14th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute timeframes align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave 1 is done, working on wave 2 down. Is this over and we're going to do a little 618 retracement, bounce and go breaking out? Or we're going to break down and yet again to make another lower low? As I've been saying for numerous months now, as we got these lows, I didn't think that was it where we'd go breaking out. We made a new low. Looking at price action, support resistance levels, etc. We said this low was probably not the low. We made another lower high, lower low, and then move on a few more months later. Same thing. Look at this price action. Was a lot of overlapping and chopping on those lower time frame. Suggested another lower low. And now we're back in the groove again. Is this the end and we're breaking out? Or is this going to end up breaking lower low? So let's jump into the charting platform and we can see Ian, James, Mr. Tucson, many others, just looking at this level. We talked about this for months. We got this green line up here around that 100.5, 100.5, and it was former support. Then we broke down, tested a resistance multiple times, even as we tried to break out again, didn't hold long. So this has been support to resistance to support to resistance, 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 resistance. And yet again, we've been testing it multiple times, which we suggested I would not be going long here. We would suggest that this is likely going to give us a pullback. We expected that if it would start to break below the magic Fibbo, specifically the 98.50 area, we said we'd likely start moving toward the 96.50 area. So that's played out beautifully. As we look at the price action, this is exactly what we talked about. Even as they said, is this going to break out? I said, not so fast. We're due for a retracement. And we expected, even as this pullback started to bounce again, I was saying the same thing. This is likely not going to be the breakout. This is just the beginning of a deeper correction. And do we hold this support zone, or if we break below this green box, in my humble opinion, we're definitely going lower low. Got it? This is the previous lowest low we have. And if we don't hold this support zone, this green box, we're definitely going lower low. And I'll use the big cursor on that because this is critical. I believe, as I stated here, we started closing below the magic Fibbo. We closed below that 98.50, which we did yesterday. That set the tone. We're likely going to continue to decline and head toward this green box. The question is this just going to be a beautiful initial move up, corrective move down, bounce off of here to go breaking out? Or do we come down in here, bounce? As you can see, our magic Fibbo is a critical unit here. Last time we did the same thing, that exact move, we grinded higher. We did a beautiful 618 retracement from that low up to this high. We did a perfect 618 retracement. But then when we bounced, we stopped at the magic fibbo and got rejected. But what was that? Let me show you how this works out. Use the 2.2, and you can use your control key for those people using this charting platform. And you hold your control key down, which is in the way, but I'll just go ahead and place it. Then you come over here to that high, and we look at that retracement. It was a perfect 618. See my 618 level right there, kind of overlapping with all these candles. But that is the 0.618 retracement from the prior low up to the high. And if I adjust that slightly, there we go. And we see that that was a perfect 618. So even though we grinded higher and we made a beautiful 618 retracement, even as this started to bounce, I kind of said, I don't think this is the low, because if this was the low, you typically wouldn't have this overlapping type of action. Every time we broke out, we retraced, we overlapped, right? So we'd go up, retrace, push higher, retrace, overlap, push up, retrace, overlap. This is typical that you don't, well, this is not typical you would see in a bottom reversal where we're going breaking out. This is typical when you see this overlapping price action. It's still corrective. Corrective against what? The downtrend. So as we called for this, we ultimately made a new low. Then you use the same 2.2. This is why I have to take these off and put them back on, because it puts lines all over the place. But that prior high over here, right there, that prior high, and you come down to this low, what happened? We did a beautiful 618 retracement to the upside / magic fibbo and failed. And then we went to the new low. Well, just because, as we've been talking about this, right, Mr. Tucson, we're likely going down here. I said it even when we were trying, you thought, ooh, that's a breakout. You know, we tested this thing a few times. We tested, it got rejected. We bounce off the magic fibbo. We go second run at it. And you thought, this is it. This is where we go breaking out. And I was like, not so fast. I mean, we've been trying for like a year to break above this zone. And even before, on the way down, we held this zone for a while, multiple tests. Then we went higher, then we eventually broke down, tested, failed, tested, 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 tested. So this has been a tough nut to crack. And that's what I was saying during that rally. I would not be going long here because we need a pullback. And as we analyze the price, I also said, based on this last 3-wave down, typically when you bottom in reverse, it's not on a 3-wave down. It's typically a 5-wave down. And I guess if you try to say, well, maybe that was the 1, 2, 3, 4, 5, potentially that could have been the A, B, C, and that would be a 5-wave down, and that could potentially have terminated. So I won't say it's impossible that this is the low, but this price action is still a little suspect. And we talked about that the last few weeks, that even if we see this as the 1, 2, subdivide 1, 2, 3, 4, 5, and that move there was wave 3, as we pull back, I kind of called that, said, well, this needs a wave 4 correction. And then we go up in 5. Once that stopped here, I then started talking about, well, we're due for a retracement. And typically, if this is the bottom, you typically will get a 618. But remember, if this was the bottom, you typically get a 618. But when we bounce, we couldn't break the 618 from the high to the low. Couldn't break that out. Ultimately went lower low. So you know what's coming. That even if we come down to the zone, in my humble opinion, highest probability we're headed there. I said it way back here. Once we started closing below the magic fibbo, the next logical place to decline and grind down to would be this 618786. What is that? From the prior low up to this current high, it's a 618786 zone. So those of you listening to this, if you're not using 618786 fibbo retracements, you're missing the boat big time. As these things come into play all the time, and it's not just on the dollar index, it's in all asset classes, stocks, futures, commodity, ETF, treasury, cryptocurrencies, you name it, it works. So I digress, but we're headed down here, in my humble opinion. Now what? We're probably going to get some sort of bounce out of here. But if we absolutely start closing below 97.50, kind of pushes, we're going to make a run toward 96.50. And if we can take this green box out where we get a candle body close below, not a wick like that, where you get a wick and a big reversal, where you just have a candle body close below this 96.50, then it's over. We're going lower low yet again. Like we said, here we'd probably do it. There we'd do it. Over here, we mentioned it multiple times for the last multiple months. And I don't think this is over and we're ready to go breaking out. But I would be remiss not to mention that this is what this big picture here in this MetaTrader platform is, that this wave 2 will end somewhere. Many years ago when I was here and we were talking about the dollar index was going to 115, 120, and we finally got to 114.72, 115, not too shabby. But we said almost 4 years ago now, we were due for a deeper retracement. I was thinking off of this low, we were due for a 618, which is around 87, down to 786, around 80. So I started talking there about 4+ years ago. And we said, once this is over, we're looking for a deeper retracement. Well, guess what else we're in right now? I did think we were going to get a 618 and a 786 somewhere in that zone. Well, if we use this swing point low over here, or even this one over here, either one, they're both in the same ballpark, but guess where you are? So if I move this Fibbo and I move it up to this low, guess where we currently are? Between a 618 and a 786. That's what I was looking for. I was just taking into consideration it's off of this low, not this low. Everybody good so far? So if we continue to break lower below this 93 area, our rule is from this low to that high, you close below the 618, which we've done already, kind of gives the tone we're going lower low around that 85, 82 zone, which would be my 1448 extension, my 1272 extension off of that. And we could potentially reverse from this. We're expecting us to do that at some point because, again, wave 2 does end. But is it going to go lower or is it going to stop here and go up? I'm not convinced, as I said multiple times. Even remember this big rally back in 2024. And I said, don't assume this is breaking out to new highs, because I expected, based on this price action, this was not complete and we needed more downside. And sure enough, we got a very dramatic rollover and we went lower low. And even since these lows, talking about that's not likely the low, we'd make a new low, we did. This wasn't likely the low, we'd make a new low, we did. And I'm still not convinced that this is the low that we go breaking out, even though I'm just telling you, some point wave 2 will end and we're going to go breaking out to new highs. Not only new highs, but the target is up around 130 to 140. So massive move higher. Is this the bottom reversal? Maybe. But until price proves otherwise, I'm willing to say it's more likely not the low yet, because we really need some more downside to finish this picture. Where does that come from? Back to the charting platform. Why do we believe that we're likely to go lower low? Well, like I was showing you, off of that COVID low over here, up to the high, most recent high where we ran back, and I said, this isn't a breakout here. We're going to make a lower high, lower low. And ultimately, when we got that lower high, we're starting to break down again. But we took out the 618, daily candle body, weekly candle body, monthly candle body. Everything is below this so far. We've been down here for so long. but we still have this 95 area. So if this can break lower to these lows, it sets the tone. We broke the 618. We have a 75% chance we're going to 85. We break the 786, it reconfirms we got a 75% chance we're going to this 85 zone, about a 70% chance to 82. And this is right in the wheelhouse I originally talked about 4+ years ago, 4 years ago, when we expected we were going to get a deep retracement. And again, you got to go out to the higher time frames to show what that was. That is this previous high up here at 115, and we reversed. How much lower do we go? I definitely think we're going to make a higher low than what? This low down here. And we go breaking out to 130, 140, which is our target up here. So the probability of the dollar index zooming in the coming years, not days, weeks, months, but years, is extremely high probability we're going to go and not only break the prior high of 115, but go back several years prior to that. Got to move it this way. And we're going to break this 120 zone that we tested in July 01 and again in January 02. We kind of tested that 120 zone, and then we got our big pullback down to 70. So what's the plan? In my humble opinion, we're definitely going to break 115, and we're going to grind our way toward this 120 first, because that's a big resistance zone. But I think we're going to break that and head toward 130, 140 is the ideal target. So probability-wise, I think this is extremely high probability. Downside of that high probability, we're talking years, not days, weeks, or months, right? All right, so is this correction from this recent low to high over? Typically, I'd love to see at least a 618 off of this low, which would put us around 87. That means this low over here, we still have to go lower a few more times, get down here, that 87 zone, or somewhere between 87 and 80. This is where we originally talked about, that would be an ideal place for this wave 2 to end, and then we go breaking out. So far, so good. But we don't have to go to a 618, 786. We basically did, and very close to, a 50% retrace. We're not quite there yet, but if we make that lower low we're looking for, that could be a 50% retracement, and that could possibly be all we needed and not a 618 or a deeper 786. So this was always the plan. We're going to get a multi-year correction that's going to ultimately end up with a higher low and then go breaking out. But why am I not convinced that this is the low? Well, you zoom in, let's go to a 3-day, and you kind of zoom in on that recent price action. From that recent low up to this high, which will adjust that to the right spot, but that low to that high, again, we took out the 618. We didn't take out the 786 of that move yet, but we did do that. We have a daily, 3-day, weekly, monthly candle bodies, not just wicks. That still says we're likely going lower low. And when you use this platform, you can use your control key, and you can use that to automatically snap it when you put it over the right candle, and it'll give you the exact high to the exact low based on that scenario, just for a quick, easy method to get the exact number. Or you can just put your cursor on it and say, what's the high? The high was so-and-so, and then you make sure that's where that ends up, and then you're good to go. But either way, we broke the 618. We're likely going lower low, and that's why I don't think we're quite finished. Well, how do I know that price action has dictated the change? See this big pink box up here? That's the critical point. From this high to this low, and this most recent lower high to the same low, this is a critical zone to break out of. It is the 618, 786 zone, which overlaps to the 618 of this bigger, higher high here, to that high, to that low. So this overlaps this high to that low, 618,786, and this high to that low is the 618 level. So if we take that out, it says this is likely the end, and we're going breaking out in a multi-year climb where we're going to stair step big ebb and flows to get up to that 130, 140. So what are we trying to tell you long term? It doesn't matter if we break lower low, we're going up here. We come down to our original target zone, which is this 87/80 zone, which is the bigger 618,786 zone. We're going up here, or, which is least likely, we're already done with the low and we're already headed up here. All roads lead to this big move years down the road. The question is, currently, are we done? Well, this is why we started talking about this the last several months, that we're looking for a bottom at some point to end, but so far, up and until we take out this big resistance zone, you can't call this with a high affinity or high degree of confidence that this is definitely over and we're definitely going breaking out our journey toward 130, 140. And I say that because even though I'm telling you we're definitely going to go to 130, 140 in my humble opinion, the question is how much lower low do we need to go? So bottom line is we're likely going to get sucked and pulled toward the 618 of this prior low up to the high. This is the zone, 618, 786 zone. Everybody good so far? So with that in mind, do we break it? If we get below this green box, it's over. We're going to grind our way, stair step our way lower and lower and lower into this target zone. Highest probability, we break 96.50, we're going lower low, which means one tick lower than this low, that can't be the end, right? This would be potentially a new bottom and reversal point, but that sets the tone. You break this down, we go lower low. In the interim, I think we got extremely high probability we're going to continue to decline and head toward this 97.50. So we got about another half a point. Do we stop at 97.50 or do we push deeper toward 96.50? I would expect some sort of reaction from this zone where we break down into this and have some sort of bounce. Like I was showing you earlier, last time we did this rally up, and I was like, not so fast, ladies and gentlemen, even though I know we're going to go breaking out to 130, 140. I don't think that's the low in which this happens because of this overlapping price action. We did get a beautiful 618 from the low to the high, perfect 618 retracement right there, which again, you don't see it, but you see it over here. That perfect 618 level right there is this green line, boom, and we bounce. But we bounced to go to a 618 from the high to the low, and we failed. So what if, William Bruce, we break down here, hint, 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 that's where we're headed based on this price action, based on what we've been discussing and how this thing broke down beautifully like we expected it to. This is where we're likely headed. The question is, when we bounce out of here, what's going to be an important level to watch? Well, again, there's so many lines on here, so I'll just go ahead and take a few of these off, especially these most recent ones. But before I do, notice this little 3-point move. High, low, lower, high. Look at where we are. If this was going to be an ABC correction, and we were simply going to do a simple little 3-wave correction and go higher, then this last push should have stopped somewhere around this 97.70, 98.50 area. We should have stopped somewhere around there and not continuation. So there's some Fibonacci rules when you look at Elliott wave and you look at an ABC correction versus like an impulsive 1, 2, 3, 4, 5 type of move. We exceeded the level, which dictates that this is very much likely, Mr. Tucson. That's the one This move up was the 2. This impulsive move down, now that we surpassed the 618, that's pushing us in the 3 category. Now this 3 could come all the way down here and end. Then we get some sort of retracement in a 4. And then we even push lower in a 5, which ultimately could go lower low. So if we close below this 96.50, we're going lower low. And this is looking like this isn't finished because we already reached the 618 of this high, low, lower high. That's a 3.2. We already surpassed that. So that says this is likely continuing as a wave 3. We can get a wave 4 and either another push lower. So maybe we come lower, we bounce at a 4, then we finish in a 5 in the zone, and we could potentially go bouncing from there. So no matter what, we get down to this zone, I don't see us slicing right through it to a new low. Anything can happen, but I would suspect we're going to get some sort of bounce off that 618 and get some sort of rally. So the next thing you would need to do, now that you see this, we're breaking that 618, this definitely looks more like a 1-2 working on 3 down, then we got 4, 5, as opposed to an A, B, C. This thing's over, and we're going blasting off to new high. Combine that with the fact that from the prior COVID low up to the high, we broke the 618, still giving us a higher probability, 70% probability, 75, that we're going to visit this 85, 82 area. And up until price proves otherwise. So right now, as long as we're below this 105, 107, the likelihood we go lower low is at a much greater probability. If we break above this 105, 107, the probability then shifts in the opposite direction. We're going higher high, and my target, as you well know, I've been saying it, 130, 140. And again, it'll take years. So up until we clear this hurdle right there, that's why I have that big pink box, and it stretches out as far as this chart will show, that until we get above it, we're not going breaking out. So as long as we stay below it, very likely we're going to still go lower low. All right. So now that we see that, and we looked at this 3.2, kind of what I led into the last week or two, as we talked about this price action, I said, don't be so quick that this is a breakout. After this move up, even if this is the low, we need at least a 618 retracement out of this. So when this started to give us a little move down, a nice bounce, it went right to the recent high to low, went to that 618, 786 retracement. You can rinse and repeat this thing till you're blue in the face. But if you don't see the power behind a 618, 786 retracement zone, then you obviously not paying attention. Why did this go to exactly a 618 retracement? And it failed, and we went breaking down. Got it? Just like we did over here. We did a bounce off the 618, but when we bounced, we went to another 618 off the high, failed, and we went lower low. So this is why I said, we take that low out, we're going to magic fibbo. We break the magic fibbo, we're going down to the support zone. We break the support zone, we're going lower low. So everything has come to pass as we were anticipating. You'll never hear me say my prediction. I leave that to the prophets. I'm not a prophet, even though you think sometimes maybe I am, because the way price action is a God-given talent to read and interpret price on a chart and decades of trading experience. So yeah, I have a high affinity for calling the right direction. Timing is a different area. I can't say what's going to come down here to be exactly April 17th at 3:50 p.m. It's going to hit this exact target. The toughest part is timing, but that's where the software comes in. The software helps us with timing on these cycles. I warned everyone as the weekly was getting overbought. Now we have a weekly hook and a cross. We got the PAI hook, steep slope, angle separation, and we're seeing that weekly hook and a cross right there. What does that tell me? This daily is going to cycle all the way down. and my daily's not quite finished yet. So that's why I suspect we're going to get another push. And I wouldn't be surprised to see this daily finish this cycle down today, tomorrow, and the next few days anyway. And then the daily starts to turn back up and we hit that 618 and start bouncing. The question is it going to hit that 618 bounce to slingshot lower and continue to make lower low? Or is this going to cycle up and we go breaking out? We shall see. That's why from the recent high to this low, when it finishes and we're reverse, you can scalp that, certainly. When a PAI hook, that's what this means, when a weekly PAI hooks and crosses the daily cycles. When a daily hooks and crosses the 4-hour cycles. When a 4-hour hooks and crosses the 1-hour cycles. When a 1-hour hooks and crosses the 30-minute cycles, et cetera, et cetera. When a monthly hooks and crosses the weekly cycles. Got it? So that's a high probability. Why is it important? Because we know timing-wise, we can use that for like options trading. When I get a weekly hook and a cross, it takes about 2 to 5 weeks for a daily to cycle. And if I get a monthly hook and a cross, it takes about 2 to 5 months for a weekly to cycle. And it takes about, just coincidentally, about 2 to 5 years for a monthly to cycle. I can use that to my advantage on timing. Yes, it could go faster. Yes, it could go slower, but on average, it puts you in the right ballpark. So is this going to be from the low to the high, that 618 retracement, we go breaking out? Or we're going to hit the 618, bounce, get a lower high and another lower low yet again? We shall see. So back to the charting platform. This is why looking at technical levels is so important. You have the software confirming, and that's why I talked about these bounces. The software is already telling you we're likely need a bigger retracement. Software is saying we need to go lower low. We originally had a daily hooking across, we meant the 4-hour had to cycle. Now we got the weekly hooking across, meaning the daily's got to finish cycling. So this is why I think we're going to come down to this box like we just said outright. Even not looking at the software, what did I say? We're likely going to fail on this bounce. This will be the 1-2. We're going to go down to the 3, 4, 5, and we're going to get down here. That is the plan. So be careful. Just like before, we bounced off a 618, rallied to a 618, failed, went lower low. But how long was I telling you this low down here with all this overlapping price action suggests this is an over, we need lower low. We got new lower low. We still got a bit of overlapping action, but if this was the 1, 2, 3, 4, 5, which is possible, subdividing, then we still need a 618 retracement. Look how all of this plays out. It's amazing. So I can't say, I guarantee, ladies and gentlemen, when we hit this box, we're going to bounce, yeah, but I can't guarantee it's going to bounce to break out to new highs, or it's guarantee it's going to bounce to a lower high and a lower low. Up and until price breaks this all-important resistance level, we have a higher affinity and a higher probability. We still need lower lows to continue. And again, we explain that over and over. Back to the weekly, we look at that prior low over here in COVID, and we broke the 618 daily, weekly, monthly candle bodies. It says we have a better chance. We're going to 86, 82 area. And if I get the exact bottom, I think it was like the 85s. There you go. 85 off of the actual low up to the current high, 85, 82. So up and until we take this box out up here, this is a higher probability where we're heading. Got it? So needless to say, is this low over? I'm leaning more to say no. But if it is, what do we need to do? We got to hold this 618, got to break back above the magic fibbo. We need to hit 102 where the big short squeeze is. All of last year was short the dollar, anything but the dollar, short the dollar. It's going down, it's plummeting to the abyss. Well, when everybody gets in that boat and starts saying the dollar's going to the abyss, that's why I'd like to see it go plummeting down to these targets down here. And when everybody thinks, oh man, I'm shorting the dollar big time now, boy, it was a good idea. That's when I'm going to reverse and go long, because that's when this dollar is going to go ripping, break out to new highs and start heading, the highs over here, start heading to that 130, 140. Got it? So the bottom line is wave two ends, we go breaking out, but is it over? I'm not convinced this is over. I wasn't convinced months ago and all these prior lows. I wasn't convinced on this big rip higher. This price action dictated that that couldn't be complete. We needed some equality. We're now at equality, but this latest price action is still too overlapping to suggest it is the bottom, but this is the make or break level. We get above this, then we have a 75% chance we go on higher high and onward and upwards, multi-year move toward that 130, 140. So in closing, I know we spent a lot of time on this, but if you know where the dollar index is going, you know where a lot of asset classes are going. So what are we learning? We're going down here. We're going to bounce. As my daily gets oversold, starts reversing, we will bounce. But do we do this same type again? This magic Fibbo starting to slope down. We start grinding down a little lower. We bounce. Do we rally back into the magic Fibbo to fail and turn back down and go lower low like we did the last time? We bounced off a 618, rallied into the magic Fibbo, hit a 618 on the upside, and then failed. So you know what we need to do, right? And I just showed you, for those keeping score, this 1, 2, 3, because we're beyond the 1618. That suggests this is a 1, 2, 3, and we still need a 4 and a 5. That means we're going lower low, right? That's confirming my anticipated move. Everything but my prediction, we were going down here. The question is, what happens when we bounce? So you know it's coming. I'm going to remove some of these lines just so you can see these at home and get an idea what we're looking for. So what if, William Bruce, we get this move and we have this high and we get this low down here in the magic Fibbo, breaking down, we come down to 618, 786. Let's split the difference. Maybe we go to 97. Well, then this 99.50 up here is going to be extremely important. Because if we bounce like the last time we did a 618 retracement, we got to get above that 618, 786 zone to warrant, yeah, this was a 618 bounce. Now we're going breaking out higher. That would take this move down. Even if we stop here, then the 618 is going to be around the magic Fibbo. If we go a little lower, you can see as I lower this, it would put the magic Fibbo right in the same ballpark, 618. If we come up to the top of this, we still got to clear the magic Fibbo, and then we got a 618 a little higher up. But this is where the rubber meets the road. So whenever we bottom and hit, we're going lower. We're going to visit this box, right, Ian? We talked about that weeks ago, that this was likely going to fail. We needed a big 618 retracement off of that low to that high. We needed this. We got it last time. We're going to get it this time. Then what? Bounce lower, high, lower, low. That suggests that's a higher probability affair than we bounce and we go breaking out, but it is what it is. So you automatically will know what the zones are going to be, and it's going to be this 99 down to about 98 area. So if we come deeper, we got the 98 up to this 99 and change. That's my 50% retracement, 618, 786. So we would extend this box deeper if we get the deeper retrace. If we do a more shallow one, hit the 618, then we would move this box down a little bit more for that move. And there's your 618, 786 in that zone. And right now, what if we reverse now? Well, like I showed you before, the 1, 2, 3 scenario suggests we're likely going lower, but we could start to retrace to lower high, lower low. But this is going to go lower low. Whether we keep going or we get the 3, 4, 5, we're going lower low. And this is why this is extremely high probability magnet sucking price down to it. We close below this, we go lower low. We bounce, then we have to break the 618, 7/8 to the upside. Then we can start talking about extensions. But here's some critical level. This 102 is critical. That's the short squeeze. If price bounces off of here, breaks above this, that would put us going higher high. And if we close above 102, then expect that price is going to rally toward this 105, 107. Extremely high probability. So I don't care if you do nothing. Set an alert at 102 and you say, aha, dollar index closed above 102 and a daily candle body closes above 102, not a wick above, but a close above, then extremely high probability we're going to rally about 3 points, at least, toward that 104-ish, 105. So this is a big time, high probability outcome. We close above 102, we're going there. That's if we get that high. So do we bounce here, make another lower high, lower low? If we make one tick lower as a lower low, then this starts all over. And we look at price action to anticipate, do we get break? And then eventually, you know, this is critical that at any time we make a new low or we don't, make a higher low, and we get above this pink box, it's over. That would be the lower low. But if we tick down 1 degree lower, 1 pip lower, 1 fraction of a pip lower right there, 94.87, whatever it is below this 95.6, 1 tick below that would give a lower low, and that obviously can't be the low, and we'd start all over. We've been doing that for months, and we've been spot on, and we continue to climb and grind lower. So expect we're going to go off of here, we're going to bounce. The question is, do we bounce to break out or do we bounce the lower high, lower low? It's possible we could go slicing straight through this, but we would at least start to see a little sideways grind, then a push lower. But I would expect we're going to bounce off of this, get some sort of retracement, lower high, lower low, especially if it's this 3 wave we're going in now, continues to just grind lower. Then we start to see the correction, then I still expect another lower low. Amen? So what could be possible is we grind a little bit lower, finish the wave 3, get a wave 4 correction, which would allow us to bounce but not go into the previous level here. We make a lower high, lower low, and after that's over, we look for the bounce. We then do a 618, 786 retracement zone. And if we break it, then we go higher high. We hit 102. You know what you're going to do. We're going to go soaring up there. And it's still possible from this high degree level, and I got to consolidate this, but from this recent high to low, that would be my 618, 786 retracement zone. And we could easily do that from that high down to this low. Say it, 618, 786. I don't make this stuff up. It is what it is, and it's a major battle zone all in one. So even if this is this kind of grind higher, we could still reject off of this and still go lower low. So this is why I'm telling you, we have to get above this area to warrant the breakout to say for sure that that's the low. So I still think we're going lower low. I still think we're going on a daily basis, next few days, going lower low and test this box. We could reach it today if we get another big candle like yesterday. Zoom in, we had a nice big candle down yesterday. We get another one of those today, we're going to be right at this thing. Got it? So grind lower, look for a bounce. Theoretically, you should get a lower high, lower low type of bounce. That's the plan, because this solidified when I use my 3.2 high, low, lower, high. We surpassed that 1618, which highly suggests that we see it past the 1618. So that's the 1, 2, 3. We're still working on 3 down. Threes can go a long way. Threes are generally the longest the longest wave of a 5-wave count. And it doesn't have to be the longest, but it cannot be the shortest. And typically, highest probability, it is the longest. And this is clearly accelerating to the downside. That is all the parameters, signs and symptoms, as I like to say, of a wave 3 down, which means what's going to happen after it stops. We're going to get a chopping, overlapping, like typically a little 3-wave type of correction in a wave 4 that would stay below that wave 1 bottom. So that's wave one. Let me mark it for you so you can see it. That initial move down was one. This little three-wave correction here was my two. This impulsive move, now that it surpassed the 1618, that suggests we're in a three down. Then we'll get another little three-wave correction in a wave four. Then we go down in wave five. And I'm going to show you this exact thing on gold. As long as gold stays below 5,000, we're going below 4,100, likely 4,000, and head lower. So be careful on gold. Then we could talk about gold reversal going to 6,000, 7,000, 10,000, etc. And I found something interesting, Mr. Tucson. There are some traders out there that put it like 138 contracts, and it's not your typical contracts that's on gold futures. And that thing is out to $20,000. And it's supposed to be like in October of this year. I think they're crazy. Do I think gold's going to be at $20,000 by October of this year? No. But some people are putting a lot of money to suggest it's going to 20,000 by October. That is just insane for me. I digress, but still looking for this to go lower low. Then we see what happens. Do we bounce? We get above a 618 to go higher, or do we bounce, fail, and go lower low? Still think we're going lower low until, like I said numerous times now, we break this big resistance box. So what does that mean? Boy, what about our euro dollar and pound dollar? Taking off to the moon. What did I say last week and the week before? We break the magic fibbo, we're going down to the support zone. I said if we move toward the magic fibbo, the euro and the pound would move, and as it started breaking below, the euro dollar pound dollar would start breaking above their respective magic fibbos. And if we got the close below we were looking for, we're going to start moving toward the support box. Wow. And the euro would go up toward the resistance box. What is it doing? Right at it. Who could have guessed? Who could have thought? Who could have anticipated something like that might happen? Yours truly. We had the software setting up. We got the weekly reversal. We got the daily cycling. We broke the 618. We broke now the magic fibbo. Where are we going? Like a heat-seeking missile, we're getting sucked up into here. Why do I think we're going to reach this zone? Because I said so. We're only a few points away from that 1837. We're about 27 pips away. And 1946, we're about 100 pips away, 150 pips away, 100, little less than 150. But this is the zone where we were likely going to test. The question is, do we use my arrows on that? Do we come up here and get rejected, or do we just kind of get another little pullback and break out? We close above this, we're going higher high. What are my higher high levels? 121, 122. How about that? Well, why do I still think that even though we may, highest probability going to reach this target, and yes, I think we're going to get a retracement, a good area to hit this retracement, come back and test that magic fibbo, bounce off the magic fibbo, kind of like we did the last time over here. We kind of broke above, retest the magic fibbo, then we broke out. Well, why not? Let's do it, rinse and repeat. We came down, we're breaking above, we hit this resistance zone, we come down and retest, and this will start sloping up the more this climb. It's flat. It was up, then it started to flatten out when we did the retracement. But as we start breaking out again, this thing will start slicing up. So maybe we get a retracement into here, a pullback, bounce off of that, and then we start reaching extension. Well, why do we think we have a higher probability of that than this hitting this and going lower low? Why? Because go out to the 3-day chart and we come back to our prior movement off of this prior high to low. We took out the 618, we took out the 786, and currently we're above that right now. That little spike right now, we're above it again. So way back, look at the timing of this. This was back in January 21. We bottomed in 2022 down here, September. We rallied to the 618, did a retracement to this 618 from the low to the high, perfect 618 retracement there. And then we did what? We broke above it. So ever since April of 25, that suggested we're going to visit 127, 130. Then we kind of chopped in the zone. We did not break the 786, and we tested it a few times. We pulled back and we're breaking back out. That suggests what? Because we did close above the 786, we reconfirmed we have a 75% chance we go in a 127.50 area and a 70% chance we go to 130, 131. This is where I think we're headed. It could still take months to get there. This does not mean we got to break out today and get there by May. This could take months. This could go by the end of the year. It could take time. Look how long it took for this retracement from 21 down to 22. And we've been grinding to this point since 22. 4 years. That was part of that big reversal. What did I say back here? Dude, we're going to have a great opportunity to go long the euro dollar, and it will make you thousands of pips, and it's going to take multiple years. But the same rule, as I've been talking about the dollar index, the euro dollar is the exact same rule, but in the inverse, right? So we come out to the monthly chart, and we see that reversal, got a beautiful trigger higher, had a monthly, weekly, daily oversold, suggested this would set up that big retracement. I'm not convinced that high is the end for the reasons I just told you. I think we still need to go higher high to finish this thing, but eventually we're going to get this monthly to sell out. I think this is going to slingshot back up, go breaking out. This will push higher, and then we'll get a monthly cycle down, and that'll start this bigger A, B, C type of correction. And we're ultimately going to head back on a monthly and start slingshotting lower and lower. And ultimately, we're going to do what? Make lower low. So that is the bigger picture. The smaller, shorter term picture is I'm not convinced that this retracement is over. We still likely need to go higher before we're done, but that is the plan. So back on the charting platform, this is because of this. When we get to this target, that could spell the end, because at some point it is going to end. Fair enough? So I come back over here to this chart, kind of where I had all this originally laid out. And all we're doing right now for the last 4 years is we're doing a correction, and we're going to go lower low, right? That is the plan. So I don't think this is the lower low. I still think we got to go higher. Will we get to our original FAR targets, or we're going to get to that 127, 130 area, maybe in this zone, and it's over and we go down? So this is not trying to tell you that we have to go here, right? We could go lower. It's possible it could be over here. Very unlikely because of our measurements and price action and our Fibonacci retracement zones, etc. 75% chance we still need to go higher high is a bigger percentage than the 25% it could be over and we're going lower low. But in my humble opinion, we're definitely going to get a lower high over here, and then we're going to go lower low. Got it? So the plan was never for the euro to reverse and go breaking out. It was simply a retracement to go lower low. And we're talking, how do we get up here? If the dollar index heads toward that 80 range, no ifs, no buts, no ands, no exceptions, we're going at 140, 145 range. Guaranteed. There is no guarantee. Dollar gets to 80, pretty much guaranteed it's going to go to this zone, just like I can peg on these lower time frames like we did here. We said if the magic Fibo breaks to the upside and the dollar breaks it to the downside, we would go where? To the zone. That's where we're headed. So it doesn't mean we have to go straight up today and touch it. It could take a couple of more days. We can stair step our way up there, but the same rule use your 3-point tool, and this recent low up to this current high to this higher low, we're right at that 618 zone. So a little more upside. That suggests we got more upside to go. We broke the magic fibbo. The dollar is expected to go lower. That means the euro is expected to go higher to test this zone. Same thing with the pound. What did I say? The dollar breaks the magic fibbo to the downside and makes a run toward the 618 retracement zone. Then the pound would break the magic fibbo to the upside and it would make a run toward the zone. Doing it exactly. All of these playing out exactly like we had anticipated. Next question. Why do I think the pound has to go higher to 139, 140? Well, theoretically, the pound has to go even higher off of this prior move over here. The same time frame. Let me go to 3-day. It's already there. But this back in 21 down to the 22 bottom. Same thing we showed you with the euro. We reversed down here back 4 years ago, plus when we were down here and we were down at 103. You can see the low down here, 103 range. I was like, man, that's an overshot of the pound to the downside. It's a great time to go long. You'll make thousands of pips, and it's going to take years, but this is a corrective mode as well. We're looking for a lower high, lower low on the pound as well. So when the dollar goes ripping to 130, 140, the euro and the pound are going to go back to their prior lows and make new lows, right? That's the plan. So at some point, this thing will end. It was never to reverse and go breaking out all-time highs. It was to do a deep, hardy retracement where we're already thousands of pips into this, and we possibly could still have thousands more to go because that high to this low, we took the 618, daily candle body, weekly candle body, monthly candle body. We took out the 786. We're back above that 786. So way back here, when we closed above that 618, that said we had a 75% chance we go on to about 1.48, and a 70% we go to 152. And then we pull back. We took a run toward the 786. Notice these levels. Magic. Then we came down off a retracement. We pegged that. We talked about buying that reversal for that big run up. We pegged this next bounce, and we're pegging this bounce, stair-stepping our way. But each time we get the high, the low, we reach the extension, get a pullback. We reach the high, break the 618. We go to the extension, get a pullback. I mean, it's rinse and repeat. So we have a 75% chance we're still going up here, ladies and gentlemen, up and until we break this support zone down here. That flips the script. But until then, no dice. We should go higher until otherwise proven, right? Like I said, 75% chance we're going higher is a much greater probability than a 25% saying we're going lower. And I'm even mentioning that we're definitely going to go lower low when we're done. I'm just not convinced this last little pop-up here was it. I think we're going to go breaking out further until price proves otherwise. Amen? All righty. So any questions on the euro and the pound? Any questions on the dollar index before we move on to the markets? But the likelihood we're going to test this support zone, so I'll kind of zoom that back in. The likelihood we're going down here to test this, extremely high probability. And I expect it's going to be in a 5 wave. Then do we get a 618 retracement to fail and go lower low? That's still higher probability than this thing bouncing and breaking out. The tune changes when we break above this. We go higher and start working on our 130, 140, multiple year type of move. But we got to get above this hurdle. In the interim, as long as we're below this, likelihood we go in lower low. And once we break below this little green support zone, it's over. We're going lower low. All righty. Now, what about our yen base pair? Be careful on these rallies. We did break the 618. We're going to 187.70. So we got about 30 more pips. We're very close to that level. And we got the 188 potentially. So Randy and others, if you're trading this long, definitely be in a position of authority. My monthly was overbought, weekly was overbought, daily, and we kind of turned over, got a nice little pullback. Now they're grinding back up, but we're right back to where we were. We're overbought. We're ready for another push down. So be careful on this little rally. We are breaking to a new high. This still looks like it's not finished. So I would not be surprised to see this fizzle in this area and still break back down. So as long as you're long on that, congratulations. Just be in a position of authority. Don't assume we're going much higher. Possibly we go to 87, 88, maybe extend it toward 90. But the higher it goes, the more I look for this rollover and the comeback down. Same thing with the pound yen. It broke above the 618. It suggests we're going a little bit higher toward that 216. So maybe another 50 pips or so. But confluence of events, this low, high, higher low, notice where those levels are, 216, 217, the recent high to low, 216, 217. So this is where I think we're definitely going. But I would definitely be in a position of authority because once we get there, I'm looking for a reversal and we need it. This looks impulsive. This looks still corrective. So people think that, well, you can't have what, if that's my A wave, which I still believe is the case, you can't have a B wave that gets a new higher high. Yes, you can. It's called an expanded flat correction. And once you get an expanded flat correction, and that's the B wave, which is likely to go a little bit higher. So be in a position of authority because this thing can reverse on a dime and come down in a C wave. So be careful. Yes, this is likely going just a little bit more. When we closed above that 618 the other day, that kind of set the tone. 75% chance we're making a move toward 216. Exactly what we're doing. That's it. So be careful, be in profit position, and don't get pigs get slaughtered when you try to take too much out of it, because I do think it's going to start reversing. You come back over here to the software, and we have this on NinjaTrader, and we have templates for you. I've been messing around with this. So we have some templates in here that'll load the software for you. But notice how on these time frames, the monthly's overbought. So that's why I'm looking for this to be tempered somewhat to the upside. My weekly, as we talked about weeks ago, it did slingshot back up. So yes, this is why I think it's still going to go just a little bit higher, reach those extensions, but we're back with the monthly overbought, weekly's back in overbought territory. And guess who is zooming right back to that same overbought scenario? The daily's there. So be careful. This probably will go a little bit higher, then it's going to come back down, but this does not look complete. Same thing on the pound yen, same type of thing. I was putting new templates on here, but we have many. If you like it in black, we have it in black. Depends on your colors. But again, the daily's back overbought, weekly's back overbought. We're headed to those extensions. And then what are we going to do? This looks very impulsive. This looks in a three-wave correction. So look out below. So take your profits, be in a position of authority. And once this baby hooks and we get a trigger lower, we're going to look to go short like we did last time, made a few hundred pips, and we're going to look to do the same again. So I can set that in the auto trigger mode to sell that rally, and we're good to go. You can do it in NinjaTrader 8, or you can do it in MetaTrader 4, and we're going to be working on MetaTrader 5 and some other platforms, slowly but surely. But you'll look at this, you go to your software, it's at extremes. You won't trigger lower till you get a hook. You don't trigger higher till you get a hook and you're oversold. This forces the software to work in your advantage. So what do we do here? We go into the expert advisor properties. We go in here and we set our take profit stop loss, and we could come in here and say, what do I want to do? I want to trigger long? No, I want to trigger short. After this rally, I'm looking for this thing because we're overbought daily, weekly, and monthly. I want to sell this when this baby hooks back over and we get that trigger short. So you do trigger short right there, and you come in. Any trigger is a good trigger, position, scalp, or optimize. And use profit triggers. We have these little profit triggers in here that if it reaches that and it fires, it'll automatically take profits for you, or it'll hit your take profit 1, 2, or 3. That's how I typically trade in the larger amounts. When I'm scalping, I do use this. When I'm not scalping and I'm doing bigger trades, I don't use it because I like to let it reach my take profit levels. And you say, okay, and then you do ready to trade mode. And this baby will sit here and ready to trade a day, a week, a month, till this baby turns over. We get a trigger short, and then it'll fire and enter your trade automatically. It'll pop your take profit 1, 2, and 3 on there, and it'll show you exactly where we're headed. Here's a trade that we're running with the Russell 2000 breaking out. We took profit 1, we're taking profit 2. As we go higher, the plan is to go up to 3,000, 3,100. So I've been in this one a little bit, but you can see it pops these levels on here. And then up here, you have your take profit 2 and 3. And this baby will sit here until you either get stopped out in profit or you keep going. But you'll notice we're in profit because we took profits, and it automatically moves your stop loss in profit. And this thing will run until it hits those targets, or you decide to click that number right there. It'll take profit 2, or you click number 3, or you can close your buy. It'll close everything for you. On-screen program, beautiful thing. But this baby sets up beautifully and helps you in advance. Well, what if I don't use the automated service and I wait for it to do its thing? If I come back and I see a PAI hooking down, then I just click the sell button. When it's in ready to trade mode, I click the sell to enter it. So be careful on this rally. Yes, I think this is the Russell 2000. We're going to go breaking out eventually, but this could still take a while to get up here. Doesn't mean it has to get here in a day, a week, or a month, but that's the plan where we're headed. But that's what it looks like. All right, so let's continue. Any questions on that? And I'll leave you with this on a higher time frame. What does the pound yen do when we get into a financial crisis? It plummets. Let's go out to a monthly. .com bubble burst went down 9,000 pips. 2007 financial crisis, 13,000 pips. What's the next financial crisis? It's going to be called the Elizabeth, I'm coming to join you, honey, in honor of Fred G. Sanford of Sanford and Son, Red Fox. And Elizabeth, I'm coming to join you, honey. Here comes the big one. Well, it's a coming. When is it happening? We'll give you some more insight. And we look forward to you being a part of this. So by all means, join us and look out that this is not likely just to keep breaking out. It's expected to be, and when it ties into a financial crisis, which is coming, it should be very dramatic. But even without that, you kind of go toward the latest price action, expand this out, and this is very impulsive. This is corrective and overlapping. So even though we're grinding these extremes, it still looks like a big expanded flat correction. And I'm looking for a lower low eventually. And if it ties in with the Elizabeth, I'm coming to join you, honey, this thing could go thousands of pips lower than that low, which is a few thousand pips from where we are now. So be careful. Yes, I think it'll go a little bit higher. Then I'm going to look to take profits and what? Look for a sell, get into establish a short position, get to a position of authority, let it play out. But this is setting up. Go back in history from that COVID low. I made a bold, not a prediction, but a bold statement way back in 2020. I made a bold statement saying, this is a great opportunity to go long the pound yen. It's going to take years, but it's going to go 8 to 10,000 pips, and it would break this swing point high. We did that. Then we got this crazy carry trade unwind type scenario right there. And look out. This is still corrective after that initial move. So don't assume this is going indefinitely up, 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 and away we go. This thing is coming way back down. And if again we hit the financial crisis, this thing's coming way down. So be careful. Be aggressively taking profits and look to short this thing. So you can basically do the same type of thing, set it automatically to sell once it's overbought, which it is, and it hooks lower. You'll get a little trigger up there telling you it's time to enter the short trade, and it'll automatically do it for you. All righty, let's continue. What about the markets, ladies and gentlemen? Is this the big breakout? Are we going all-time highs? Maybe. We're pushing the envelope, but we're still at lower highs. There is a relatively high risk of rolling back over. We could potentially break out to slight higher highs, all-time highs, and then roll over. But this big rip, and that's a weekly, but look at the daily, we really haven't had a pullback. One of any significance. Gaps higher. This is the SPX index. So when the markets close and reopen, you can have these gaps. So be careful with that. That's why I like looking at ES. You don't have those type of big gaps. When the contracts flip over, you might see small ones, but typically you get price action 6 days a week, every day but Saturday. And you typically trade 23 hours a day. So you get all of that price action filled in. I like to look at that. We are starting to break above the lower trending high line. That kind of sets the tone. We could possibly go higher, but this is also at a very high risk of rolling over. Why? We haven't had any type of retracement yet. We've just been grinding and grunting. Well, let's go back a few months ago when we had this price action, we broke out and we saw this price action. I said, ladies and gentlemen, don't be falling for this breakout, false breakout. We need a lower low. We got it. Since this lower low, this still looks a little suspect. Yes, we're starting to break above the resistance zone. So this could certainly open the door to go a little bit higher towards 7,071, maybe 72. But be careful that this could roll over from a lower high, right? NASDAQ did it from that high over here. NASDAQ rallied towards it, looked like it was going to break out, then rolled over, made a lower low. ES did go on to a slight higher high, but then it rolled over, made lower low, like we were talking about the last several weeks to month plus. We expected this to go lower low. Now that we have it, we expected this thing to rally and give a false breakout. This is the zone. I was thinking it would take like May, June to get up here, but we're already here in mid-April. Did it much faster than I expected, but I definitely expected we were going to go testing the zone. So now what? Do we break out? Maybe. Be careful. Be aggressively taking profits. If you're trading this ES long right now, you have 49.5 points, 50 points. I'd definitely be taking profits because this thing is at a high risk to roll over. It's still possible, certainly, that we could go breaking all-time highs and still roll over going into October. This is not very clear and concise based on this chop zone. And we're right back into these prior highs that we failed so many times. We're right back in that zone. So this is not crystal clear. We'll bet your life it's going up here. Yeah, there's a good chance of it. But this thing could also roll over at a lower high. Right? Because I'm not convinced this thing is ready to go breaking out. But what I've been saying for the last several weeks is we were likely going to get a run towards May, June. Then we would flip down and come for the much deeper retracement in toward October. Then we would go breaking all-time highs and go zooming to the bubble hunt. Then we would look for Elizabeth, I'm coming to join you, honey, maybe sometime in late year, if not early next year. So let's see how this plays out. Please do yourself a favor. If you've been in this grind higher, great. We expected it. We anticipated it. We did everything but predict it because we leave that to the prophets. And we're due for a pullback. So if this thing starts rolling over, a key level to watch would be from the recent low up to the high. And we'll just use the current levels right now. But from the recent low up to the high, we start rolling over. We need to hold the magic Fibbo / this 6,500 zone. If we start breaking below 6,500, 6,480 zone, then it says we're going lower low again. In my humble opinion, even if we go breaking out now, we're going lower low, or we fizzle and start rolling over, we don't hold the 618,786, we roll over, we're going lower low. So be careful on this, please. Mark my words, this thing, yes, it could go a little bit higher. We've been in this run up, expected it. We got what we were looking for. You come over here to the software. We got the reversal we look for. Let me go over here to back this way. S&P right there. We got this reversal we were looking for. We got the daily reversal. We're getting overbought. We're at a lower high. Notice we did break that slight lower high trend line. And this one over here, we're breaking it. So this suggests we want to go breaking all-time highs, but we're still at that lower high. And this is looking like it wants to flip back over the next day or so. So I'd be very cautious, be in a position of authority and expect this thing's going to pull back. Got it? Software's at extremes, looking for this thing to turn over. The weekly was turned over. Steep slope angle separation. This weekly did not quite finish the cycle. Red and blue did, but money flow right there shy. And the trend momentum one is still a little shy. So I would not be surprised to see this go from a slingshot up to a slingshot down. And if it plays out like we're thinking, we get lower high or slight higher high, we then roll over into October, get that bigger pullback. Maybe we get that weekly magic Fibbo visit. Then we substantially set up a much higher high going year-end Santa Claus rally and maybe even the first quarter next year. So let's go back to the charting platform. Software kind of set up this bounce. That's why we said high probability we were going to get it. Now we're getting to extremes, which means it's likely we need to see a pullback as the daily flips over. We're going to get that pullback. The question is, do we maintain a lower high and we end up with that lower low, or do we go higher high, then we get the lower low? Still think that's in the cards. Amen? So what are we looking at? At least a 3-day magic Fibbo visit. So if this thing fizzles out at that lower high and we push lower low, you would expect at least the magic Fibbo right there. And if that doesn't fulfill the need, then we'll go on to that weekly magic Fibbo, which is even a much more better deal on the weekly, and I'll show you why. This would be ideal. From this recent low, right, our Liberation Day low up to the current high, that would put us right at a 618 retracement, where the magic Fibbo is right there. So what does that set up? We call that a combo meal. We get the 618 retracement combined with a magic Fibbo bounce. This thing could stratosphere into the 8,000s, maybe even upper, mid, even 9,000. So how does that work? Let me show you. You take the 3-point tool on that one. 3-point tool. You got the Liberation Day low. You go up to the current high, and then you come down and bounce off of this magic Fibbo, and you'd see where my one is, right around 8,000, and my 1618 So let me take this other thing off of here, kind of overwriting some of my numbers. And this other one as well. Let me take that off. But you can, I took the wrong one off. Let me remove a few of these, start from scratch. So everybody's on the same page. I want a 3-point tool on this. If we can get that beautiful low up to the high, to this higher low, we get that magic Fibbo bounce, 618 retracement, sets the 8,000 potentially in the mid eights, even to 9,000. So if, ladies and gentlemen, we can roll over, get that weekly magic Fibbo bounce, it sets the tone. We're going to the mid eights, 8,000 and above, and potentially could push us as high as 9,000. Then we would get the big Elizabeth, I'm coming to join you. Now, what if we just start breaking out now and we don't stop and we just keep grinding higher? Then I don't think we're going to get quite that high and we're going to get the bigger retracement. We're due for the bigger retracement. Why? Well, go out to a monthly. We have not had an actual retracement of a 618 since this 2009 financial crisis end, right? Financial crisis 2007, we bottomed in 2009, started that massive reversal. So we have not had a 618 retracement at any point. You go to these levels, that level, this level, you keep going. Never at any point did we get a 618 retracement. So I still think we're going higher high. 75, 78, maybe we push into the eights. But notice where this is setting up. Even we push up here right into that zone, we go through the far extreme. We get that beautiful weekly magic Fibbo bounce, and then we go ripping toward that extension. Look at from that prior low to that prior, which will be the high. We get a, Elizabeth, I'm coming to join you, financial crisis, and we finally get a 618 retracement. And you would think, well, there's no way we could be in 9,000 and ES is going to correct back to 3,000, 4,000 range. Oh, yeah? We haven't had one. We're overdue. So this is an area I'm watching when, Elizabeth, I'm coming to join you. What is it going to look like? You can go to your software on this. And what's that going to look like? You go to your monthly. And that monthly that's been slingshotting higher and higher as far as this one will go back. We're going to get a big cycle down. It's going to take years, usually at least a year or two, maybe 3, a bigger type of correction that could last a very long time. But this thing likely going to end up cycling down. Last time we came even moderately close was right there when we slingshotted higher. Amen. Then another slingshot was the Liberation Day. This was the 22 September, which we pegged that thing as this was running up. So we need a big correction. Took almost a year. We finally got it. Warranted that move. So the next one up after we go blasting off and finish this thing, we're coming down. Not if, but when. And likely going to get a magic Fibbo visit out of that. And this would be cycling down. I believe we have it on this other platform. It goes further out, but I can show you the last financial crisis on this monthly chart was back here in 2007, and we got that monthly to cycle all the way down. Trend momentum 1 and 2, entire process, we cycled down, and it took us a year and a half or so, almost 2 years from 2007 to 2009. That was that big cycle down. Remember I said a monthly takes about 2 to 5 years? There you go. So what is the next financial crisis? When we get this monthly to cycle down. Where is it likely to bring us? Back toward at least this magic Fibbo. How cool is that? So in closing, be careful. This is not a guarantee that this bullish price action is definitely breaking out. I was looking for this to grind into May, June. then go into September, October, get a lower low, then start blasting off into all-time highs as we go into end of the year, maybe first quarter of next year, it's Santa Claus rally, etc. That would blast off. This could be the breakout, but all this chopping and overlapping, and we're right in an area. I can use this one here. We're right in that area of all these prior levels we've tested, right? Kind of in the zone. Test, 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 test. So we're right back in there. So what would I be doing with this profit right now? Bank it. Don't assume this thing is just going to rip indefinitely higher and higher. And yes, I will say we're definitely going higher. You can see my target. This is my conservative target. And this is my more aggressive target before we're done. But in the interim, I think, in my humble opinion, we need some sort of retracement. Probably before we get here, we're going to get that deeper retracement, then the bigger bounce to reach this and or that. Then we'll look for Elizabeth, I'm coming to join you, honey, when the markets are ready to crash. We use a barometer that you find over here. And right here, we'll go over gold in a minute. Gold below 5,000 equals gold headed to below 4,100. I'll show you what I'm talking about there in just a moment. But you come over here to the heat map. Bar chart, heat map, Schmeat map, burn. That's what we go to. And when this, how many companies are the S&P 500 above 200? Moving average. When this baby starts pushing 80, 90%, 80 and higher, preferably even toward 90 and higher, it's time for a market crash. A big retracement crash. They say a definition of 15% retracement is a crash. Well, this thing gets above 80, 90%, expect that's what's coming. You want to see the markets all do it together. You want to see Russell do it at the same time. You'd like to see the Dow do it at the same time. And you'd like to see the NASDAQ do it at the same time. So, as I was calling for, right, go back to, that was the S&P ES. Look at NASDAQ. NASDAQ looks like it wants to go breaking high. It broke the original lower trending high line. Now we're in the zone. Are we going to be able to close above this week and close above this resistance zone to warrant going higher? Or are we going to end up reaching toward this lower high trend line and fizzle and come back down? But we still more likely going to fizzle. And even if we break a slight higher high, I'm still looking for a correction before the big one comes. And we get a bigger blow off top. So as this is rallying, we're nowhere near that 80, 90%, right? Look at that heat map. We're nowhere near it. So this isn't it. This isn't the market's going to crash. The man says it's going to crash. No, when this is at 80 and 90 or 80 and higher, preferably pushing 90. When the Dow is at 80, preferably higher, pushing 90 or higher, all of these companies, how many companies in the Dow Jones are above their 200 moving average? When that's pushing 80, 90%, look out. When the S&P and Russell 2000 pushing 80, 90%, look out. Combine that with the S&P pushing 80, 90%. Got different ones in here that break down the different large caps, small caps, performances, energy, sector, rotation, etc. But the main one I look at is the S&P 500. So when we see 80, 90 here, Dow 80, 90, NASDAQ 80, 90, Russell, then it's look out below. And what's that going to be? Elizabeth, I'm coming to join you, honey. So extrapolate that to the chart. What if we get here and we're seeing that 80, 90? We're probably not going to the extensions, obviously. Right? What if the NASDAQ does that same type of retracement from the low and we get a 618786 type of retracement combined with this weekly magic Fibbo? Notice where this sets. From that low up to this high, right at that 618 zone where the magic fibbo is sitting. So do a 3-point tool on this one, Mr. Tucson. It puts us in the stratosphere, that low up to that high, and we retrace down here toward that magic fibbo level. Where does that put us? Look at that. 30,000 would be an equality move. A, B, C. Equality move would put us around 30,000. And if we get this to bounce off of this weekly magic fibbo, because we retrace down here to say 20,008 area, maybe 21,000, where we're near that magic fibbo, bounce off of that, then it could potentially set us up to go to 36,000. Wow. So this is my conservative target. My aggressive target is way up here. So I'm going to take some of those off and leave this one so we can see that 3-point tool. If we get a lower high, lower low, as we get into October, we come down here, bounce off of this 618/magic fibbo on a weekly. That sets the tone. We'd at least go to 30, if not extend this to 31, 32, might even blow off to 36. Well, what if we get here and we see all of those barometers, that heat map showing all companies, indices, right? Dow, 80, 90% above their 200 moving average, S&P, 80, 90%, NASDAQ, 80, 90%, Russell, 80, 90%. We're here, look out. If we're up here, doubly look out, right? The further we go, the further we're going to fall. So in closing, be in a position of authority on these bounces. This is not a given we're breaking out, even though I'm telling you, in my humble opinion, we're definitely going higher high. No ifs, no buts, no ands. But we may need that correction first before we can get there. And if we can get the bigger correction, come down to this weekly magic fibbo, then it sets the tone. We're likely going at least 30, maybe as high as 36. But it would put a big, huge bubble up here, potential for us to do a very aggressive target up here, but a big target, right? I'll move this down just a touch and stretch that out. But that would be my target zone. Go toward 30, maybe 36. If we get what? This retracement down to this zone, the bounce sets the tone for this more aggressive target. If not, and we get either a lesser type of retracement, and we don't get quite that far down to that 20,000 range where that magic fibbo is sitting. And if I stretch this out, you see the magic fibbo sitting between 20,002 and 20,008, right at our 20,003 618 retracement zone. So if we can get that deeper retracement, then it sets the tone. We're going 30 and higher, more aggressive target. If we fizzle and get a lower low, which is likely, but we don't quite go that far, then we'll probably get more to this zone and less likely to this upper zone. Got it? So you would think, well, why do you have to pull back further to warrant a higher probability for an upside? That's just the momentum in the magic fibbo that a 618/magic fibbo combo gives you those extensions and opens the door to some massive upside. Amen? So be careful. I'm not 100% convinced that this is ready to go breaking out now. Yes, I'm about 100%, on a 100% scale, about 1,000% confident we're going all-time highs before we're done. I'm just not convinced this rally is the one. We may fizzle, come lower, which would be ideal. This was initial, Emil, salivate country because we were going to get a cycle to go back into the zone. We're there. So that's why I'm taking aggressive profits and looking to do something else. What if this breaks out? Still think we're going to get a correction sooner than later. And we have it on the software. The software is saying the same thing. Here's NASDAQ. Software, the daily's back in extremes. We're at a lower high. We still got that lower high trend line right there that we could still possibly run into and fail, just like this we thought we were breaking out. I did say that this move down was not complete, and this rally up, we needed a lower low. We got what we needed. So it's possible we could go breaking out on this one. We got it. But I would really like to see a lower high, lower low, just so I can salivate down here around that 20,008, 20,003 zone, hit that magic fibbo to bounce off of that to set the tone. We're going even higher high. Amen. And you go to your weekly, it's part of the software. It's on there. It's like Prego. We make a lower high, lower low, bounce off that magic fibbo. So what would the software look like? This slingshot up to slingshot down. If you were looking at these archives and reviewing the past several weeks, we talked about this engage, disengage. What happens when you engage, disengage? We go to a lower low. Typically, we did that. Now we're engaging up. I even called for this to start cycling down. Is this in? Maybe. Maybe this is it and we go breaking out. But until we go breaking that lower trend high line on this one, we still could rally, fizzle, and still go lower low. Be careful, even if we start breaking to a slight higher high, because we could maybe make a slight higher high and then still roll over. I'm looking for a rollover to start going in toward October. Does it start in May, June? Does it start in September, October? When does it start? We shall see, but be extremely careful on this. The daily, the weekly starting to push higher, yes, but my daily's back toward overbought territory, and my monthly's kind of exhausted up here as well. So this is why I'm not convinced we're ready to blast off just yet. And yes, I did call for this to what? Slingshot. And one of these last catapulting slingshots, which is a big thing, starts catapulting. We're going to get the Elizabeth, I'm coming to join you, honey. And this baby's going to go cycling down. Just like we did in the financial crisis. Boom. We cycled down. We went down for a couple of years from 2007 to 2009. And that kind of set the tone. That is coming. This is Elizabeth, I'm coming to join you, honey. But this isn't the high yet. We will make all-time highs. And I still think we're going to get there when what? We see it on our heat map. Amen. What does that look like? You click on it, it goes to this. So you want to come down here, stretch this out so you can see some candles. Notice the last place we tested. Extreme oversold. Where we're ultimately going, up here at 80, maybe 90. Notice what happens when you get to 80, 90. Big retracements from 21 down into 22. Massive correction. And all these. It doesn't go far enough back to reach all of this. Is barely at the financial crisis right here. But you can see here we're at extremes going into that financial crisis. Then during COVID over here, we started to hit that extreme. We got that big pullback in the COVID. So anytime you're above 80, pushing 90, this is where you say, need to take profits, get out of the market, look for correction. Anytime we're below 20, especially pushing 10 and lower, that's when you look to buy. And that's where we were last at the Liberation Day bottom. It reversed. And yes, we're going up here. And do we get to that 27,000, 28,000, or do we get that bigger retracement, come down a little lower on this 200 moving average, then go blasting off, and we ultimately get up to the 80, 90 when we're pushing the 30,000s on the NASDAQ? What's it going to be? I know this is ES, so that would be somewhere around that 75 to 78 conservative target, or more like 8,000 to maybe mid 8s or so, maybe even 9 when we're pushing up here, I'll be able to tell you when I see it. Amen? So in closing, I don't care what you're trading or how you're trading it. Be in a position of authority. This is not a guarantee we're going breaking out. And you look at the last several days, we haven't really had a retracement in here. Nothing of substance. So typically when you get this straight up move, what happens? You get a correction. And what are we looking to do? Sell. Sell this rally in the short term when this baby gets overbought and we trigger lower, just like the pound yen. Do the same thing on the NASDAQ and ES, because we're expecting some sort of correction, and the correction may include even a lower low. So we're looking for a pretty good retracement regardless. Even if it's a higher low, higher high, we still need a correction. And when do we do it? When the daily PAI hooks. All right. All righty. Let's continue. Russell. Still think we're headed to 3,100. Be in a position of authority on this. You can see based on this recent low, high, higher low, that brings in the 2850. I'm looking for this target up here, push toward that 1618 zone, which would be around that 3100. So 3,000, 3,100 is what we believe we're headed to. Does this mean we're going straight up there? No. I think we're going to get a correction in here, but it's possible we could get this thing just to go ripping quickly, get the bigger pullback in October, down in October, then get another push where we even go higher by the time we start reaching nosebleed sections, and we look for the Elizabeth, I'm coming to join you, honey, late year, maybe early next year. We'll go over it, but you know what to look for. When we all reach our bubbles and we look at the heat map and they're all pushing 80 and 90%, then you know it's time, wherever it is, either lower or higher, that it's time to get out and look for something else to turn and look for this big pullback. All right. All righty. So IWM, we're breaking out. Suggests we're going to 275, 280. Highest probability, short term, we should get up here. Can we push toward 290? Maybe. But be careful. I am expecting this, even though I do think it's going up to 31, 310, 315, maybe 330 up here. This bubble, we may reach these targets, pull over into October, then get the last blast into the end of the year and the early next year. So be careful on this. Yes, we broke the lower trending high line, but again, we're still at lower highs on all of these. We're at risk of rolling over. Why roll over? And I don't mean roll over definitely to a lower low, but a rollover because we have not had any type of pullback. It's just been kind of straight up. You do that times all the market, just kind of straight up without a rollover. ES, straight up without a rollover. So don't be greedy. Take your profits and look for this thing to start rolling over, Harold, whether it's to retrace to then go blasting off, or whether it is the rollover to get the bigger retracement I'm looking for. This still looks too chopping and overlapping, especially since we did make a new high. This definitely looks overlapping, so we probably still need one more flush. Amen? And I'm going to hold to it. Even if we go breaking out, all-time highs, woohoo! Still think we're going to get a push down into the fall, then a blast off year-end / going into next year, Santa Claus type rally. Okay? All righty. But if I had to guess, we're likely going to start rolling over sooner than later. And is that rollover the beginning of a multi-month decline where we start pushing toward the fall? Or is this just simply a quick, we retrace some and we go in the, remember I said April, May we would get up here? We're already here in April. So maybe we get a little retracement, we push to a little lower high up here, higher high that is, and we do what? Then we get the summer doldrum / fall correction. Then we go blasting out even higher. All right, we shall see. So be in a position of authority, look for this rollover coming soon. and set the software for this to start turning down sooner than later. Nikkei. Is the Nikkei doing the same? We're reaching this target. I thought this thing would grind into the zone. Clearly, that's where I thought we were going, but not this fast. Is it possible we can go breaking out now? But this looks impulsive. This looks corrective. So we really need one more lower low. So again, a little bit ahead of my schedule. I was thinking we'd grind higher clearly to right where we are by April, like May, June, not April. So we're definitely ahead of schedule. But it still says we got a very good chance to get turned down to go lower low. So maybe we do this because we're ahead of schedule. April, we pull back and then we do one more push into May, June. Then we get the fall correction, and then we get the blow off top into the year, in the first quarter, etc. We shall see. So be careful on this one as well. Why do I even look at the Nikkei? Global liquidity. It's simple, my friends. Go back, and I won't need to go. I'll go to a weekly, but go back to this big pullback here. It doesn't look like much because of this big run we've been on. But remember this back in July of 24, August, from July and August, that was the carry trade unwind. Then we got Liberation Day coming into April, and we got Liberation Day, and this thing took off. Well, we really hadn't had much of a retracement other than this most recent one from that low. And this looks corrective, like an impulsive move. This is still corrective. So this would be more ideal for a little three-wave correction coming lower. I'd love, as this is sloping upward, this thing to go plummeting down into the 40s, hit the magic Fibbo, which again, setting up like the rest of these indices, from that low up to that high. Whoops, that's a 3.2, Gary, need 2.2. From that low up to that high, look where that 618's looming. Kind of grind higher. This starts rolling over. This thing will keep grinding higher, start to flatten out. And maybe as we get to October, we get a perfect 618 retracement, somewhere around the mid to low 40s. And then we set up with a weekly 618 magic Fibbo combo bounce. And then look at what that does. Use your 3-point tool on that one. That low, this high, this higher low, look where that puts us. 73, potentially moving us all the way to 93. Wow. Talk about a blow off top. And then what? Elizabeth, I'm coming to join you, honey. So we have conservative targets and we have aggressive targets on all of these. But this latest price action Harold says, please, please, please pay attention and be careful that this does not look like a three-wave correction. This looks more impulsive. 1, 2, 3, 4, 5. And this looks like a B. So A, B, C. So this is likely going to roll over. And again, if you look at all these with the software, the dailies are at extremes, looking for them to roll over. Is it a correction because we're way ahead of schedule? And then we go popping even higher into May, June. Then we get the fall correction. Or do we start rolling over sooner and grind longer into fall? But that's kind of what's setting up. So be careful. All right. Gold. Remember I said gold is setting up with the same thing. As long as this looks impulsive. 1, 2, 3. Very impulsive move down. Why is that? Because we exceeded the 3.2. We exceeded the 1618 and then some. So that's very impulsive wave 3. This still looks corrective. And remember, I had drawn lines on here May 14th. Whoops, wrong direction. Don't want that line. I want this line. We drew lines here at May 14th, which is today. And the other one is, I guess I'll keep using the same one, May 28th, which is right here. April 28th, excuse me. April 14th, not May. April 28th, right? Mama, right there. So what are these brackets about? When you see wave 1, 2, 3, wave 4s generally are 3 to 5 times longer than wave 2 correction. So this one took a handful of days. This was taking three times longer today. It could be the end and we end up with a lower high and we start tanking down lower, or we grind and maybe we do something like this, because 3 to 5 times, maybe we do something like that. And then eventually we come down. So over the next couple of weeks, I would expect gold to start rolling over to go lower low, as long as what? We're below 5,000. So that's what it meant on our software, on the class schedule. Gold below 5,000, gold headed to below 4,100. Long as we remain below 5,000, that's setting up a lower low for us to go to that. I think I have it right there, this lower low. So please be careful on gold. Why? This looks like the initial move A. This is the B, and we're still working on C to complete 1, 2, 3, 4, 5. And then once we're down here below 4,000, below 4,100, right? And we start pushing, hopefully down toward this 38, 37. If you'll recall, months ago, I talked about after this pullback, we were running the gold trains, never going to stop. I said, take your profits. We're going to have a big pullback, somewhere in the neighborhood of 40 to 50%. At least 50 is what I was looking for. Well, is that it so far? From the high down to this low, we got a 20-something%. Silver did do the bigger percent retracement, gold not quite, but I still think we're going lower low. So maybe we don't get a 50%, but somewhere around in this 37, 3,800, the lower part of my bubble. We did reach the 4,000 zone I was talking about. I said we should at least get to 4,000, maybe 3,700. After hitting this low on this not being complete, that's why I think we got one more push lower. Amen. So Harold, what are we looking at? Just like on some of these, the dollar index, that's the 1. That's the 2. Impulsive 3 down. All of this chop and grind is wave 4. As long as we stay below 5,000, then we get a push down in wave 5, probably pushes below the low. All we need is a lower low to finish this thing, ideally. But ideal place would be somewhere around that 38 level. That would be perfect place for it to go down, 38, 37. And look who's sitting just a little bit lower than that. Our 3-day magic Fibbo right there. So let me take that off. You see the 3 days sitting there. I would really prefer if this thing would overshoot, not let the markets do it, let gold do it too. Get this bigger push and get an overkill and push us down toward the magic Fibbo on the weekly chart. That would really set things up. Next target's going to be 7,000, then 10,000. And as I was mentioning earlier, if you didn't hear it, there's some crazy people out there, Harold. They're trading futures contracts. They're not like typical contracts, but futures contracts. And somebody bought 138 contracts on gold reaching $20,000 by October. Something's going on. Either that person's insane or I don't know. But I can't imagine gold ripping to 20,000 by October. I don't see it. Some people are putting money out there. Then there's a bunch more, like 1,000 plus, around 9,000, 8,000. I could see that potentially sooner than certainly doubling beyond that and going to 20. But it's some sane stuff. People putting that kind of money down on a $20,000 contract for gold to reach 20,000 by October of this year, not 2030 or anything. October of this year. Insane. I digress, but you get the point. So in closing on gold, look for lower high, lower low as long as we're below 5,000. We start clearing the hurdle at 5,000, 5,300. It's over. We're breaking out. We got to clear this hurdle up here, which is this zone. But in the interim, as long as we're below 5,000, this sets the tone. We need one more squirt down, push us down below 4,000, below 4,100 anyway, and then toward probably 37, 3,800. All right, there you have it. What about silver? Same thing. Now, silver did do what we needed during this run. You know, I was the biggest proponent of silver for a long time. I told you years ago when silver was pushing this push, we were going to go breaking 50, break all-time highs, and go breaking 50 over here. And sure enough, we went ripping higher. I didn't expect we necessarily go to 120 that fast, but we would break out. We've done it. Then when during this big run, I said, what? Look out for about a 40 to 50% retracement. And on this one, we did. Gold didn't quite do it, but silver did from the high down to the low. There's your 50% retracement. Is this over? It's similar to gold. I don't think this is quite finished because it looks like we need a lower low. And I can't imagine if gold does it, silver's not going to do it. So you come over here to the daily, and we're watching the same kind of zone. If we break out, then we could potentially go, but I think this is due for a resistance pullback. So I'd be careful on this rally in looking for one more push lower low than that. Even though we did get one, this chopping overlapping price action still says we need to clean that up. So be careful on this rally, take your profits, and I don't expect this to go breaking out just yet. I'm expecting another flush lower. What about what's on everybody's mind? ABD. No. What's on everybody's mind? I guess it's over here. Tesla. I guess it's this way. Did I change my? There it is. I thought I had it. CL. Now, this is danger zone. We get rockets flying again. You know, we kind of put the medicine back on Iran, thinking we're just going to control the Hormuz, Strait of Hormuz. And now that we blockaded it, not allowing any ships into Iran ports or anything out of Iran port, they can't even try to sneak behind by changing flags on these big ships and tankers. We now control who gets in, who gets out, not them. So I digress, but where is that leading us to? We technically, this move down and this corrective move up to a lower high suggests we need lower low. Be careful. Rockets fly again, or they blow up a ship that's going through the strait or something like that. This thing could instantly get squeezed and go blowing out. 130, 140, 125, 130, 150. If this thing goes indefinitely and they keep blowing up stuff, this thing could even push to 200, 220, 250. I never want to see that day, but it's certainly logical. But the price action, considering just straight up price action, very impulsive move down, corrective move higher to a lower high, suggests lower low. Lower low than what? Not only lower low than that low, lower low than this low. So we put us right back down toward the magic Fibbo. That would be a great area. So from the recent low up to the high, if we can close below this green box, right, everyone? We tested it, we bounced, we're testing it. So we close below that box, say 91.50, 91.50, 91, close below that, we're likely going lower low, and I would start looking for the 72, 73 range, which would be lower low than that, and the magic Fibbo is a beautiful area for us to go test. So keep an eye on this. If you're shorting black gold, fine, but be in a position of authority, because all it takes is one little rocket to fly and this thing could go ripping. But we got the big run up, initial move down, looks corrective. So Harold, this would clean this chart up if we can get a lower low. Then potentially we could go blasting off, or we can actually go and make new lows, which we were looking for long before this skirmish. Not much of a skirmish. It's basically we wiped them out in days, the military, army, this, that, and the other. Yeah, they're insane people. You can imagine why you don't want them, even after what they've been through, annihilated all of that. They still would refuse to give up uranium enrichment. So you think their plans are to use a nuclear bomb? You betcha. I don't know what the Iranian Valhalla is, but I could see them destroying the world, thinking they're going to Valhalla, whatever their equivalent is. I digress, but be careful with this. We close below 91, kind of sets the tone. We're going to visit the magic fibbo. All right, rockets fly. This thing can go blasting off 125, 130. So what is the more logical thing? Lower, because of price action in the measurements, right? That's big move down, impulsive, three-wave correction. That looks like an A. This looks like the B, and we're working on C down. This thing could push. What if this is the wave one? That's the two. We push 3, 4, 5. We could even be down making new lows before it's done. I'll keep an eye on this for you, but in the short term, I would definitely be watching the close today. And if we close below that 91, then suggest we're going lower low, which would push us down toward the magic fibbo. All right. All righty. Let's continue. Bitcoin is the cleanest of the bunch. Believe it or not, Ripley's, believe it or not, Bitcoin is setting up what we talked about, getting a bigger correction into May, June, then getting the big plummet down below 50,000 to 30,000. And let's start off with the high level overview. Every 4 years, we do a crypto halving, Bitcoin halving. And every post halving, we go 12 to 18 month run, followed by a 12-month decline. Right? Even in the midst of all this, all the things that happened, Sam Bankman-Fried, and all those fraudulent things that happen, you still get a 12 to 18 month run, 12-month roughly low. Then you start grinding toward the next halving to run 12 to 18 months, low, high, low, high. So last one was 22. This one's going to be in 26. And then notice we topped out in 21. We topped out in 17. We topped out in 13 over there. We topped out in 25. So 13, 17, 21, 25. When are we going to top out next? 29. And then what? We topped out in October, which was exactly 18 months post-halving. And what are we looking for? We're going down to 50, 30,000. So in the interim, I think we're going higher. I think we're going to grind into that May, June, run up somewhere in the 90,000 range. Maybe we could exceed it. So what you do to get some levels is you take the all-time high. I'll run some new numbers on here. You take the all-time high, and then you come down to the current low, and we're looking at some sort of retracement as low, maybe in the 90s. Could push maybe to 100, maybe a little bit toward the upper. So we got like a $20,000 zone, about 108 on the top side, and maybe 88 on the downside area. So I'm expecting this to grind in here, May, June, then go plummeting into, say, September, October for the low. And that low will be between 50,000 and 30,000. Just like we said years ago in 2022, buying Bitcoin below 20,000 is a steal of a deal. Projected to go to 150, we went to 126 and change. A little bit shy of where we need it to be, but that's okay. I don't think anyone's complaining. Buying below 20,000, selling at 100,000 and above is any kind of complaint whatsoever. Well, the next one is we're going to buy down in here. We get to 50,000, nibble, get to 40,000, nibble harder, get to push toward 30,000, push, nibble like smorgasbord, and then hold it in 2026, late 26, something like October would be ideal. But anytime it hits 50,000 or lower, certainly a perfect nibble time. And then look for this thing to go blasting off into fall of 2029. Halving in 2028, 12 to 18 months post halving. And I'm expecting that to go into 200,000s. So we can buy at 50, 4 to 5x easily up there. And if not, we get down to 30,000. We're talking this thing could be 6x, 7x or more. From 30,000 to 180 would be a 6x. So I'm expecting to get to 2s. So this thing could be even a 10x, 30,000 to 300. We shall see. But that's the plan. Buy low, sell high. Pretty simple, right? Everybody tell you that. Buy low, sell high. When do I buy? Start nibbling at 50,000, more if it goes to 40, and load it up if it gets to 30. And I say that with a grain of salt because that's what I'm doing. I can't tell you what to do. I'm not a certified financial planner. I don't even play one on TV. So no buy, sell to hold recommendations. I'm just telling you what I'm doing and what the chart tells us. 50,000 and lower, just like it was at 20,000 and below, was an ideal time to nibble on those lows to get that blast off. And that's coming again. Rinse and repeat, rinse and repeat. And with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it. That's all.